So I'm only going to do just a few minutes of kind of where we're at with the loan process. And it's, there's still, I just want to make sure that people know that there's still money available. That's a big thing. Only about 60% of the total funds that have been allocated have been used. So there's still well over $1 billion available. So if people haven't applied, I'd really like to make sure that you have some resources and places that you know where you can go to do that. And it's not, now that we've done, I don't know, gosh, I don't know how many of these that we've actually personally done, about 60 of them, I think. It's not, the process is what it is. It's pretty straightforward and easy. We're learning to put together the forgiveness piece of it with some spreadsheets and things like that that will make it hopefully as easy as possible for what the banks want. But we're all just still kind of trying to figure it out. I just want to hit some highlights tonight about things to keep in mind, and then let everybody know that we're here as a resource for you. So that's what the call tonight is about.
Well, we appreciate both you and Jessica coming and doing this for us tonight.
Yeah, absolutely. And Jess, are you here? I lost my screen.
Yeah.
Oh yeah, there you are.
Can you hear me?
Yep.
Oh, good. Okay.
So Jessica and I talked earlier this week. I'll just say hi to everybody. Is everybody pretty much on the call that we think we might have for tonight? We can give a couple more minutes.
I didn't get RSVPs except for Sharon and Kim. And
Okay.
Mike Schmidt will be joining us in just a little bit.
Awesome. So this meeting is just a little bit about, where we are with the PPP loan funds, the EIDL as well, which is the economic injury disaster loans. Those are being funded right now. There's not a lot to those. Those are pretty much a straight SBA loan. Pretty good interest rate. They are meant to be used for injury to your business from directly related to COVID. So a reduction in earnings, specifically 25 to 50% over last year is sort of the criteria that they're looking for. We don't know a lot about the EIDL as far as down the road, what are they going to require? Are they going to require you to send them financial statements every year, or we're not sure what the process is really going to entail on that side, to make sure that you're using it appropriately, because it is not to be used for expansion. Don't go out and purchase a new vehicle for your business or something with it, because it's a good faith loan. So that's kind of what we know about the EIDL. The only interaction between the EIDL loan and the Paycheck Protection Program is that $10,000 grant, or up to $10,000. So it ended up being $1,000 per employee. And that amount will be deducted from the forgiveness of the PPP loan. So you will have to pay that amount back. Just it goes into the calculation when you go to apply for forgiveness. So that amount will be reducing the forgiveness. So that's kind of it on the EIDL. There are funds, again, available with the EIDL right now. They're only accepting agricultural businesses for the EIDL. And so the PPP is still the way to go if you haven't gotten any funding and you need some. Like I said in just the beginning of this call, there's over $1 billion left in that funding. So, let us know if you would like to reach out to a bank. There's a couple of banks even here in the local area that are funding for non-customers. So if anybody is interested in that, for sure, let me know. I can connect you.
So I have a quick question on that. If it's only being accepted for agricultural businesses, is that something that Heidi should be sharing with her farmers at the
Sure.
farmers market?
Yeah, absolutely. Yep.
I have shared that, just an FYI, that's been emailed out to them.
Okay.
Great. Yes, and that application is actually very straightforward. So it's still funded directly through the SBA. So if you go to the SBA.gov website, the application is still there. Okay, so PPP is essentially, the guidelines are that you get this money, and from the moment that it is deposited into your account, best practice that we've been advising people on is, if possible, put that into a separate account, like a savings account or a money market, or a separate account that is very traceable. We don't know, we're better safe than sorry. That's kind of the best case scenario, is to keep those funds separate and not having them in your operating account, just so that there's no confusion that you may be spending those dollars on, supplies or accounts payable or something that's not approved for forgiveness. So the things that are approved for forgiveness are salaries and wages, of course, up to a maximum of $100,000 annualized, which is at most, for the 8-week period, you're going to have $15,000 and I have a number somewhere, 15,300 and some dollars is what the maximum amount for one employee would be, because that payroll is annualized. And then employee benefits, which includes health insurance, employer contributions to a retirement plan, and then your taxes will only be state taxes. So not employer FUTA, not federal Medicare or Social Security. So just the employee side of that, and then your state taxes that are paid by the employer. Interest on debt that was incurred before February 15 of 2020 is also approved for use and for forgiveness of the loan. Rent, anything that was enforced before February 15 of 2020 is also appropriate for using and forgiveness. And then utility services, which began before February 15, is the other item that can be used. And I did discover in conversation with a group of people today that they include internet, which is something that hasn't typically been thought of as a utility, but they are allowing the internet access and phone. So other things that you can use it on are other rents that, what does that mean? Maybe people are wondering if you can use it for renting equipment, like if your business rents equipment, or if you have a lease on something other than business space rent, can that be used? It's kind of up in the air. There's lots of ambiguity in the language. So there's things that we think they would allow, but honestly, we're kind of looking to use as much of it as possible, number one, in payroll for sure, and then the other things, the rent and mortgage interest, debt interest, and utilities, because we know that the language supports those things. So use as much of it as possible there. If you've overfunded on the loan and you have extra dollars, then you have a little bit more wiggle room. You can pay some other things with it. We can track it and submit it and see if it will be forgiven. But it's certainly not a guarantee. So then after figuring out what you're going to spend those funds on, I think the best case scenario for that we feel like for direct tracking is going to be either keeping a spreadsheet or certainly having a bookkeeping system like QuickBooks or something that where you can designate all of the accounts payable, that you can mark them with a PPP loan. This item is classed for that loan, and so that money is directly attributed to being part of that funding. So that's, we're kind of not sure what they're going to ask for, but they are for sure going to ask for documentation that the money was spent either directly or indirectly. So directly from the account, or indirectly meaning you spend it out of your operations account and then you make a transfer of money from a savings account or another account where those funds were held, and you transfer those into your operating account to show that that specific amount was used. So if your payroll was $20,300, you transfer exactly $20,300 into the operating account to show just consistent use of the appropriate amount of the loan. Let's see, other questions. So I think the most common questions that I'm getting right now, and you guys, I'm going to just open it up to questions here soon in just a minute. The most common question I'm getting is, about the 8-week period. And I know that Sharon from Sharon's Boutique, she and I talked about that this last week, and that do we think that they're going to give us more time? And that has been passed by the House, and it's sitting at the Senate, that they may give us 24 weeks to use the money. Of course, it's not completely approved yet, so it's not a guarantee. So the goal is to, as close as possible, use those funds as if we don't have any new rules, nothing new coming out. So the 8-week period starts the moment the funds are put into your account and ends 56 days after that. And anything that is accrued or paid in that amount of time will qualify for forgiveness. So there's a little bit of, again, there's in the formula, there's the loan forgiveness application that came out, says that there can be an alternate payback period, and that would be if your pay periods fall typically in a longer pay period where you have a semi-monthly or a monthly payroll, you can actually move the date to include closer to the actual pay dates so that you'll be able to extend the due date a little bit longer. However, if you do the math on that, and we just did some examples today, pretty much straight across, we couldn't come up with a time where it really made sense to increase the length of time that you would have to use it by moving the date farther out, because the language includes accruing the cost of payroll and paying the payroll. So on the front side, you would have more room to accrue than you would if you were paying on a future date and you accrued that payroll through the end of the 8 weeks but hadn't paid it out yet.
So Marcy, excuse me for interrupting, but we had a question.
Yeah, please do.
So I don't understand the bit about utilities before February 15th. Why before and not after?
The contract of allowable forgiveness on utilities is that the service has to have been in place prior to February 15. It can't be a new service that you just signed up for. Does that make sense?
Where's Linda? Linda, does that make sense?
Yes, that makes sense.
Okay.
Okay. Yep. Sorry.
And then I have a quick question for you on the rent. And I've talked to you about this before. Did you find out anything about storage rental?
Yes, and if that is part of your your business, that's going to be kind of an other rent. It wouldn't be something I would bank on them saying, oh, sure, yeah, that's no problem, because it's not technically your office space, but it is part of what you use to do business.
Mhm.
So, and if you don't have another office space rental, I think it would be included.
Okay.
Yeah. But it's not your actual office space, so it's a little fringy,
Okay.
if that makes sense. Yeah. And the other thing is, you can use these funds for sure. It says rent, and it doesn't say you couldn't use that money for rent for that specific item. But when it comes to the forgiveness, that's where, you know, we have a little bit more, you know, yeah, go ahead and use it for all these things. But then when it comes time for asking for forgiveness of the debt, they may put their foot down and say, no, only office space, or, you know, something else. But right now, the language is a little bit freer on what we can use it for versus what we get forgiven for.
I'll have my accountant deal with that.
Yeah, okay. So 75% of the loan, you know, best case scenario, if you have lots of flexibility in your banking, would be to have a pot of an account for just payroll. So you put 75% of the funds that you got literally into an account just for payroll to come out of. And then 25% is for other uses. And so if you have the ability to have another separate account, or be able to separate that so you know exactly how much you're spending the 25% on versus the 75%. Again, that would be ideal for just showing super clean tracing of those funds, you know, that you didn't do anything other than these. You didn't buy, you know, accidentally spend something out of your operations account that was actually SBA tagged money. And if you haven't done that yet and you've already received funding, so, you know, rewinding, you can still do that by moving some funds, the amount that you received, moving those funds into another account, and then just moving the money back to start that tracing now if you hadn't done that before. Does that make sense? Any questions? Okay, no. Okay. Let's see, what else do we have to go over? Forgiveness is, the application is 4 pages, and it's a little bit interesting. The hard part of the application is really in the worksheets. That's where everything gets a little crazy and starts not making sense. So one of those pieces is the FTE calculation. And that is, of course, where all of us who had to shut our doors or who reduced the business and got some people, some of our employees, you know, went on unemployment, or were laid off or reduced their hours. This is the spot where you're going to figure out how many full-time equivalent employees you were able to either retain or rehire by June 30. And here's another little thing that may be changing is currently the date to bring your payroll back up to the amount that it was prior to February 15 is possibly changing to December 31st of the end of this year, so December 31, 2020. So they're realizing that some states, ours included, is still very shut down, with a lot of stores and restaurants still not open, and therefore we don't have employees hired back yet. So the calculation is really going to be on, you know, a number of how many employees that you had based on 8 hours a day being a full-time employee. And so how many of those employee hours made up, you know, 2.75 employees, and as an example. And then now, do you still have the equivalent hours of 2.75 full-time employees? If not, you have until June 30 to either increase those hours or hire a new person or rehire someone or bring them back off of furlough or off of unemployment. So on May 22, one of the things that changed with the language for the SBA was that documentation has to be included if you can't achieve that same number of hours or salary, that you will have some wiggle room, a little bit of allowable decrease based on the fact that a lot of our employees don't want to come off unemployment because the benefit of being on unemployment is better. Let's just be honest right now. So so we're getting that a little bit from, especially our part-time or minimum wage workers. And the government is very clear that that's happening. And so the last time they changed the language for the second before the update that occurred on Thursday, they said that part of the documentation needs to include that if you offered your employee their job back and they declined, you have to document that, and in your documentation, you also have to document that you contacted unemployment and let them know that the employee is refusing to come back to work. So that's part of the, for you to get forgiveness if you can't reach those minimums. They want that to be documented that you offered the employer or the employee their job back and they declined. Well, let's see. Okay, I'm going to open it up for some questions. Does anybody have questions or comments or?
Something just before we go, forgiveness. I've been getting a lot of the same questions. So the big one, part of the bill that is going through right now, the amortization period. I've been getting a lot of questions on that. So if my funds aren't forgivable, what does that look like? It's still very up in the air, and we don't have answers. So my best advice for most of us, all of us, is stay with your bookkeeper and stay in contact with your bank and your banker. Mm-hmm. The SBA has given very little guidelines to banks on what the forgiveness process looks like. The ABA, American Banker Association, just wrote another strong worded letter saying we want more guidance on, because we're just the funnel for this, right? So I wouldn't be concerned. When this thing first rolled out, there was a lot of concern that one bank A was doing it different than B and doing it different than C. And that's going to be the same with the forgiveness process. So be patient. We are adapting as we get information. So it's going to look different, a little bit different everywhere you go. The procedure, the forgiveness itself won't be different, but the way we go about it or the documentation from one place for another might be a little bit different. I just wanted to throw that out there.
Yes, thank you, Jess.
There's still a lot that we just don't know yet. Keep changing it.
Right, for sure. Does anybody else have any questions at this point?
I do, Marcy. So Jessica, Brian here down at Gig Harbor. So at this point, you may have already answered this. Do you have any idea what kind of financials the banks are going to be looking for during the forgiveness process? We're going to be looking at balance sheets, P&Ls, any of that stuff?
We don't know what we're going to for sure request yet. I think your bookkeepers probably have an idea. I think Marcy said you were just on a 2-hour conference call. It'll be a lot of documentation on what you use the funds for. So like she said, if you didn't keep them separate or don't have good bookkeeping, backtrack a little bit. But as far as projections or any of that, we don't know. We don't have a hard and fast answer.
Yeah.
Okay.
Yeah, same here. So of course, being in accounting, what we do is create spreadsheets. So we have created, of course, a payroll forgiveness spreadsheet that includes all of the allowable items. So, of course, the payroll line item, the benefits, the employer taxes, and we're just breaking that down either from QuickBooks, because of course we that's our business, is tracking tracking these expenses and P&Ls and balance sheets and producing those financial records in commercial software. So whether they're going to ask for it in a P&L and a balance sheet, or through a general ledger, or through just a simple bank register, there will be, we have multiple options of running reports that are going to be specific to identifying whatever class we created for those funds, or however we set up tracking. We can narrow it down and produce a report that shows exactly the transaction detail. However, somebody who doesn't use software, I would say to be prepared to have a manual spreadsheet very clearly showing what you use the money for, but also being prepared to submit something like a bank statement. So it's very likely that they're going to want to see direct tracing, that you for sure 100% use those monies directly from your bank, directly for those expenses. And then, a spreadsheet just kind of clarifies that you tracked it all and you have backup documentation. The bank statement would be a backup documentation to support what you said you spent the money on. So that's what I'd be prepared for. And also, running reports in a number of ways in QuickBooks or Sage or other software would also work.
Marcy, I have a question relative to the FTEs.
Sure.
And essentially, it's just as of June 30th, there's no average for some period compared to what you submitted on the application. Is that what their intent is?
Well, yeah, what is the intent? The intent is that I think they're wanting to show effort to regain or retain employees and keep them off of unemployment as much as possible. So that said, as long as you can show that you're ramping up to your prior levels of spending, which is again why another 16 weeks is sitting there on the books for us to potentially have more time to do that. But there will be a formula for reducing the amount of forgiveness based on that, in February, that the last payroll that you did in February or March, and you had 4 FTEs and now you only have 2, you're going to deduct the 2 from the 4, and your loan forgiveness amount will be reduced by a percentage of that. So that would be 50% technically. So that would be a 50% reduction in the amount of forgiveness of your loan as the language currently stands.
The other question that's related to that has to do with seasonality. I know there was some dialogue in the application about that. How are they handling that?
So seasonal employers, the period of time that they're looking at for you to have an FT, for you to calculate your full-time employees is smaller. I believe they're calculating it off of like January 1 through February 15. And what you're going to do then is annualize the amount of payroll for that period, and then you're dividing it by 52 weeks and then multiplying that by 8, and that will be your 8-week period of annualized payroll for a seasonal employee. Did that make sense?
It makes sense, but it doesn't make sense.
Yeah. I know. That's exactly kind of how it is, and we all said, oh, okay, well, that's what they're saying right now. Yes, because there are a lot of businesses that their season has actually already passed, and now they're not rehiring employees because it's not appropriate. You wouldn't put more people on payroll right now. Even accounting, of course, this year tax season is lasting forever. So, but normally we would have a lot of payroll until April 15, and then we wouldn't have as much after that. So they would base my payroll would be based on a seasonal account from January 1st of this year through February 15, and then I would annualize that by multiplying it through the end of the year, and then dividing it into 52 weeks, multiplying it by 8 to get 8 weeks of payroll. And I can't say that there's, depending on what your season is, I think that's where that flexible period of time comes in. If your season is, just the summer, then you would have a different period of time, but it's still overall, you're going to annualize the payroll, divide it by 52 weeks, and then multiply it by 8. Any other questions specific to
Yeah, Marcy,
Peter?
Marcy, one more question on the FTEs.
Yeah,
Did I hear you say that an FTE is 40 hours a week?
yes.
Oh.
Yep, by
Yeah.
full-time equivalent. So there's so if you want to do a really simple calculation and you don't want to fill out to the tenths of an hour, 40 hours a week, and some salaries 40 hours a week, haha, that would be nice, wouldn't it?
Yeah.
So Mary's laughing. So you can take 1.0, 1 FTE is full-time, or you can make, and then you can make 0.5 is part-time. So anything, salary, we're pretty flexible on how we track hours. So it's actually, per pay period. A semi-monthly payroll is different than biweekly, on and on. So if you say how many full-time people you have, it would just be 1. And then how many part-time people you have is 0.5, and that's the simple way to calculate. So if you still have 4 part-time people, then you would have 2 full-time employees equivalent out of 4 part-time, and then however many full-time people you have. So that's the simple calculation. The thing to remember is just to keep, however you applied for the loan, use the same standard for asking for forgiveness of the loan.
Thanks.
Yeah. Mm-hmm. Any other questions?
Yeah, I've got another one for you, Marcy.
Okay.
So state payroll taxes are on the items of on the forgivable list. If our quarterly payment falls outside of our 8-week period, how does that work?
It applies to accrual. So
Okay.
as long as that payment is planned to be made, that's included. And again, it's just the employee side of the 941 tax, not the
Okay.
employer side. Correct. Yep. Any other questions?
I'd like to make sure I understand the 75-25 rule, which may change to a 60-40 rule.
Yes.
So does that mean that 75% of the funds can only be used for payroll and 25% can only be used for the other factors?
As it stands now, yes. That is correct.
So in the proposed 60-40, is it the same thing, or is there more flexibility?
In the proposed 60-40, that's the whole reason they're saying that, is so it's more flexible. It allows you to actually use those funds for a longer period of time for other things, knowing that employment is really tough to cap out that 75% at this point. So Yeah, the same rules will apply. It will still be just for payroll expenses. The 60/40, it'll be 60% payroll and 40% other expenses. And again, we're waiting on approval from Congress, to get that passed. But we're hopeful that if they implement the extension of the time period, so they go from an 8-week forgiveness period to 24, it makes a lot more sense that they will change the 75/25 to 60/40. Any other questions, Gary, or anyone?
Yeah, I was just going to say on the 60/40, what that might mean is you'd use the 60% up for payroll in, let's say, 2.5 months, but you might use the 40% over 3.5 months. It would give.
Yes.
Okay, thank you.
Yes, exactly. Okay. I think, those are kind of the basics of everything. Let me see. Like I said, I just did a 2-hour webinar today, and oh my goodness. I think that I'm just going to kind of go through the basics, like 1, 2, 3. Keep in mind, these are the things to be looking for, watching out for. Kind of just in direction and order of importance. There's things to watch out for is good faith. Number one, if you didn't need the money, give it back. Don't think that you won't get audited potentially. That was one of the things that, of course, the CPAs are really hip on, is that they can go back 6 years if they decide to deny forgiveness. You can be in review for 6 years. So you'll want to keep all of your documentation and all of your supporting things that you applied for the funds, and then things that you said, hey, this is what I spent it on, and keep your bank statements and keep everything for 6 years. In the event that you get audited, anybody who borrowed more than $10 million or received more, or not 10 million, 2 million, is automatically getting audited. I don't know that applies to any of us, but there's one reason to be glad that we're small businesses. So let me just go through these really quick. If it brings up anything, just feel free to hit the chat. I'm reading off of something right now, so I can't see the chat box. So what do you...
Marcy, we do have one question in the chat box. Since you
sure.
can't see it.
Okay.
You mentioned a spreadsheet that you had created. Is that something you can share with them?
I would be happy to share it. It's not easy. I'll just tell you, it's not super simple. It was created as a conglomerate between a bunch of CPAs and tax people, so it's not really easy to use. I'm happy to share it though, and I can send that to someone if they want to grab my email and let me know, and I'll email it out. Okay. The other way to do a spreadsheet, and actually what would probably be most helpful for the tracking piece, which is what I think everybody is really concerned about right now, and that is what we should be concerned about, is the tracking and tracing of the funds. I'll send out our simple tracking spreadsheet, and that's probably actually more useful for you. The spreadsheet that we created for figuring out FTEs and all that is, again, not based on 100%. This is for sure what the forgiveness is going to be. It's sort of a tool that we're playing with. So until the rules get for sure set, the banks actually tell us what they're going to want, it's probably not super useful to send out spreadsheets that are really complicated and you're going to try to figure out and spend a lot of time doing until we really know what they're going to ask for. So if that makes sense, and feel free to email me at any time and ask if you need help with any of that. We're happy to help.
And I just put your email in the chat for everybody.
Oh, great. Oh, I see that. Great. Okay. I am going to my list here. Okay, so what do I need to do to get my loan forgiven? Number one, keep track of your spending during the 8-week period. So that's the biggest thing. Show what you're spending that money on. Keep in mind the things that are allowed to be for it to be spent on, and those are the things you want to be really clean about. Number two is at the end of the 8-week period, excuse me, you're going to download your final payroll expense report. So however you track your payroll, or if you're a sole proprietor, you know, you took your line 31 of your Schedule C for last year, you divided it out over 50, you divided it by 52, you multiplied it by 8, that's your payroll. So you're, you know, have documentation of that is the amount that you're paying yourself. And you'll want that number to be, you know, clear how you came to that number. Number three is gather evidence for expenses outside payroll and any documentation that you have from previous payroll for terminated employees, or if you offered them their job back and they declined, or they voluntarily reduced their hours because they didn't feel safe coming to work, etc. You need documentation for those, for each thing that may affect those numbers and decrease the 75% payroll goal. So make sure you have that. And that's a hard thing, I know, for a lot of employers, is keeping all that HR documentation. But it's very important to get forgiveness. Number four is obviously submit the application to your lender by the deadline. So the deadline right now, as it stands, is from the end of your 8-week period, you will have 60 days to apply for forgiveness. And then the lender has time, and I think they have another 60 days. Jessica, am I right on that?
It hasn't been like absolutely finalized, so we haven't rolled out a policy yet. That sounds like what it will probably be, though.
Okay, and then they send that request, and you know, they review it, they send the request and the documentation to the SBA, and the SBA has 90 more days. So you're looking at 150 days before you'll get an answer, which means that for a lot of people, your first loan payment is going to come due before you figure out if you're going to get forgiveness or not. So just keep that in mind. As it stands, that's how it is. They are determining that they may extend the due date of the first payment as well. So keeping that in mind. Those are the main things. I think the other kind of just like best practice for us after we went through this call with everybody pitching in and saying, oh my gosh, we decided, don't jump the gun. Don't be the first guy to submit the application for forgiveness, because there's so many ambiguities and so many things that can still change and language to be determined that, you know, just, we don't want to do something and then have it be irreversible and not be able to figure it out better. That was one of the things that happened in the very early stages of applying for the PPP loan. We weren't sure how it was all supposed to be calculated. And so some people didn't get enough funding, and then some people got too much. So I think over time, all of these things are better with consistent people using it and figuring it out, and you sort of come to the thin line of truth of somewhere in the middle is good, you know, the good place and the solid spot where we want to stand and keep our numbers. So yeah, that's the consensus. Is there any other questions? Awesome. Crickets. Okay, so I think that's about all I have that's really directly what we know at this point. If things change, I advise people to stay on top of changes that occur with going to a website. I'm going to see if I can put it in the chat, because this is where you will find actual things. Facebook is full of all kinds of truths, and it's not all directly from the Treasury. So if you go to home.treasury.gov, you will see updated anytime there's movement through Congress or through the Treasury Department, the IRS. That will all come on this website, through this website, and be updated as it occurs. So I'll pass this out for everyone.
So Marcy,
Yes.
does everyone understand that, and maybe if this has changed, this is going to be taxable income?
At this point, again, yep, it's taxed right now. As of the update on April 30, the IRS determined that the forgivable portion, anything that's forgiven, will be taxed as income. That wasn't the intention when the CARES Act first came out. They said it was going to not be taxed. But as with all things from the IRS, they decided that forgiveness of the loan and being able to deduct payroll as an expense from your books means that you're double dipping, and they don't want to allow that. So right now, they have, that's kind of sitting out there. Many people are appealing it. The AICPA and other organizations are definitely working on to get that reversed, but as it stands now, it will be taxed.
So as a nonprofit, is it taxed? We had
Mary,
talked about that before, and I know Stephanie's on here, so.
yeah, I don't want to speak specifically to that. I would probably just ask, Bob. I would probably ask the CPA specifically about a nonprofit, because I don't know if there was specific language related to a nonprofit organization in the last update on the CARES Act. I don't know if they made a caveat for 501c3s. Yeah. Any other questions? Did that come through? Nope, not yet. Okay. Let me send this.
Jessica,
Yep.
did you have anything else you wanted to add?
No, my biggest thing to bring to the table is that there's just so much changing right now. Just stay in
what?
contact with your banker would be my biggest advice. We are getting things slowly, and it changes quite dramatically. And I know that people have a lot of questions, but Marcy covered most of them. Amortization on the loan, if it's not forgiveness, what does that look like? We don't know. I'm assuming it's going to be extended a little bit longer, but we haven't gotten guidance on that yet. There's a lot in the bill that's going to Senate, and we're kind of just standing by and see what that changes, because there's a bunch packed into it.
Mm-hmm.
So
yeah, for sure.
What is someone in my office is just like hurrying up to wait. We're in a big hurry to just wait.
Yes, the interest that is accruing during the 8-week period, they haven't decided, if the interest piece of that is going to be forgiven or not. That is one of the questions that's out there. We don't know. I and the side of caution is I just want people to be prepared for paying back some portion of it. Again, if you got an EIDL advance, that will be for sure taken off the top of the forgiveness. So be prepared that you're going to at least have, you know, that part of the loan to pay back. So if you got $5,000 worth of your PPP loan will not be forgiven. Just to be, you know, sure on that.
And I
But,
know Marcy said earlier, oh, sorry, go ahead.
oh no, that's okay.
That to really use the funds for what they're intended for, just since there are so many moving pieces that we don't know what's going to happen. You know, I get the question all the time, almost daily since this thing got out, is what if I use the funds, I'm not having people come back, and I just use it for other things and pay it back? Because the interest rate on PPP was so low. And my best advice is to just really use it what it was intended for.
Yeah.
I don't know how often the government doesn't penalize, or I mean, free money is never free money. So just really use it what it's intended for. And if you do need financing for other things, there's still the funds for EIDL in that term, and interest rate are pretty great. If not, go to your bank and see if we can get creative with other SBA products or different types of lending, but I would use this for what it's intended for.
Yes, I would agree. And again, I was just advising one of our clients today because now all these EIDLs that have been applied for many months or weeks ago, many weeks ago, are now being funded. And, you know, so people are saying, oh, another $128,000, yay. And there's always strings attached. So just remember, any government funded program, anything you get where you sign a document that attaches your business to the government is subject to change. It's subject to all kinds of looking at later, investigation. You know, there's just, I don't think that, you know, like to be like, oh, don't do it, because if you do need it, do it. But that said, if you don't need it, it's not something that I would want to attach my business to and expect that it's going to be just a great way of funding because of this crisis and it was easy to apply. I think down the road, the rules can always change and probably not in our favor. So,
Right.
yeah.
So I have a question on the EIDL.
Yes.
You mentioned, let me go back to my notes. Uh-oh, you disappeared though. There we go. You mentioned on there, you have to show that you took a 25 to 50% hit to your business during COVID.
Well, that's the original criteria for determining whether or not your business has suffered economic injury. So that it's just kind of a guideline. That's not something that they're saying, you know, it's just a guideline. They're not asking for that proof right at this moment, but that is something they could ask for, attached to taking the money for the SBA EIDL loan. Economic injury is a decrease in revenue by, or is determined at this point by a reduction in your revenue of 25 to 50%, depending on other things, of course, like seasonality and, you know, things like that. So,
Because I can see for a nonprofit, the reduction could be later in the year. It may not have hit yet.
for a lot of businesses, for sure. Yep. Yeah, and comparing first quarter of 2019 to first quarter of 2020, there really wasn't a lot of difference for most businesses. It's still to come. So I think we're looking more like Q2 and even Q3 to actually show that the revenue has decreased by any amount, you know, specific to the COVID-19 situation. Anyone else have any other questions? Thank you guys so much for your time. I appreciate just the opportunity to share en masse a little bit. We like the calls. We get lots of calls all the time, but it's nice to just kind of put it out there in an orderly fashion for me as well. We're still digesting so much information every day that it's kind of nice for me to just see where we are too and share it with you guys. And as I get updates, I'll share them with Mary, and she can send them out if she feels like it's applicable and appropriate for the rest of the small businesses here in the harbor.
Happy to do that.
Yeah, thank you.
So
Well,
Jessica, maybe you could touch real quickly on the next session that we're going to be having on the 15th of June.
Oh yeah, I'm excited for that one. Aaron Latimer is, I guess, kind of a jack of all trades, but he started focusing on YouTube videos to help business owners during the pandemic. So he has helped. Usually he does real estate agents and will help them with their marketing, but he wants to show how to do simple videos and really easy tricks to use an iPhone or an Android and make it look professional. He can dig into different things on how to improve the lighting, what time of the day is the best, where to make sure you don't echo, different things like that. And I can, if there's a bunch of questions too that we want to make sure to touch base with, I can make sure that he has those ready to go. But it's how to maximize your business in the weird position that we're in. What was I going to say? He can go over, social media, how to maximize your presence on social media if you're going to buy ads, what to target, and just really, if you can't have your doors open, you can't have as many people, and just how business is going to look different for a little bit, just trying to adapt.
Well, even as we go forward into phase 2, when we finally get there, I know that customers may or may not feel comfortable going into the stores. So I think it's really important that they have that information on how to have that online presence, especially the videos. And, we've had a couple of businesses do some Facebook Lives, and they've been really fun. So I hope this will be a really helpful session for everybody. And that's on the 15th.
He has a couple of YouTube videos, and maybe and if he has a handout, we can link those. But they're really informational too. There's features on this. I have an iPhone, and I didn't know that it could do all this thing. So.
That's awesome. I love people who teach me stuff about technology.
They're important to have.
They're really important, especially now. All right. Well, thank you guys. If anybody has any questions, please do feel free to email me. Mary put my email up there. If you need some help with anything, we're happy to help. Just we want to be there for all of you guys. And I know the first round of forgiveness applications are coming up at the end of the 8-week period. Just remember, be in constant touch with your bank. That's the primary person to reach out to and see what they're wanting or what they're doing, because they have to approve. They're going to go through that forgiveness application, and they're the ones that have to approve it to be passed on to the SBA. So that's where to start. And then if you have questions about how to get to the numbers that they're asking for, reach out to us at ABC.
Well, thank you both very much. And thank you, everybody, for
welcome.
joining us tonight.
Thanks, Marcy.
Thanks, you guys. You're welcome.
Thanks,
Bye. Nice to see you all.
Good to see everybody.